Hi, I'm Shae Russell from Fat Tail Media, and joining me from the other side of the world today is none other than Jim Rickards. Jim, how are you today?
I'm fine, Shae. How are you?
I'm good, thank you. Now, thank you very much for joining me in what's a mini election special here at Fat Tail Media for our Rockstock Insider and Hard Money Trader subscribers. First things first, so for people who aren't familiar with you, in spite of the many books that you've written, I just want to draw attention to your record of forecasting American elections. So back in 2015, when Trump was, I believe it was 2015, when Trump was up against Hillary Clinton, everyone said Hillary had it. The polls said Hillary had it. The media said Hillary had it. You were one of the very few commentators that actually said, no, this is a win for Trump. And you stood your ground and you were right all along, in spite of the polls. So what are the polls telling us this time around? Are the polls telling us that it's a shoo-in for Trump or that it's a shoo-in for Biden? And do you have any thoughts on what the actual real outcome of who the president might be?
Sure, I'd be glad to go through all that, Shae. And as a matter of fact, on that 2016 forecast, our election is in early November, the first Tuesday in November, whatever it may be. But right around that time, I had a new book out. I was The Road to Ruin at the time in 2016. I was on the World Book Tour, and I was actually in Melbourne, and I did an interview with Ticky Forwarden, who was the anchor for Australia, the broadcasting company, ABC. So we had a nationwide broadcast in Australia. And that was one of the places I made the prediction. I did a few other places. I was actually in Europe, Australia, and New York on that tour. But one of the video clips that, a lot of people after the fact would say, oh, I said that was going to happen or whatever. And maybe they did, maybe they didn't. But the great thing about doing interviews like this one is you get it, you have the proof, so to speak. But what I did in 2016, as you said, and you're correct, the polls all favored Hillary. That was the almost universal view. But you have to know how to kind of disaggregate or really reverse engineer the polls. The polls are badly flawed. That doesn't mean they're worthless. It does mean you have to understand how to interpret them correctly. And let me give you a couple of examples. And by the way, the reason I'm going through this is it plays into my forecast for the 2020 election, the one that's coming up in a few weeks. So you'll see it right now, by the way, Joe Biden is way ahead in the polls. But on the same date in 2016, Hillary Clinton was ahead in the polls by an even greater amount, and she lost. So what's wrong with the polls? That's the first question. And the answer, there's a lot wrong. First of all, in the United States, not everyone is registered to vote. So there is a category, there's all adults, if you want to start there. Then there's a category called registered voters. Well, obviously, registered voters would give you a better sample than all voters because you have to be registered or else you can't vote. But even among registered voters, only about half of Americans actually vote. So there's a third category called likely voters, where the pollster says to you, oh, are you, okay, you're registered, that's fine. Did you vote in the last 3 elections? Do you plan to vote in this election? Well, if you say yes to all that, they'll put you in the likely voter category. So right there, when you get the polls, you have to go to the source. You have to read the fine print, and you have to ask yourself, were you polling all adults, registered voters, or likely voters? Only the third, the likely voters, is going to give you a good base, kind of an accurate read. Well, we just had a poll that came out a few days ago. It was one of the big names. I think it was the Wall Street Journal. Might have been ABC, or maybe they do it jointly, but it was a very large, reputable name. And it showed Biden ahead by about 16 points. Well, I looked at it, and it said it was all registered voters. I said, well, that's meaningless because they didn't take the extra time and effort, and it does cost money to get it down to likely voters, number one. Number two, you have to look at the sample size. I hate to make it a lecture on statistical science, but for a population the size of the United States, you need at least about 1,300 people who answer your poll to have a margin of error even as high as 3.5%. Well, this poll that I mentioned, first of all, they're registered voters, not likely voters, but they only polled about 800 people. So that means that the margin of error is more like 4.5%, 5%. Either way, 5 up or 5 down. So you have a 10-point margin of error, and they're giving you a number, but they're saying, well, it's in there somewhere. Well, is it here or is it here? Makes a big difference, leaving aside the fact that it's off because it's registered voters to begin with. And then the third thing you have to get right is Are they asking Democrats or Republicans? Well, a fair poll, you'd ask, both, and you'd get that proportion about the same as the likely voters. So if there's slightly more Democrats than Republicans in the likely voter category, it makes sense to ask slightly more Democrats rather. That's a fair sample. But they ask way more Democrats. They'll ask 58% Democrats, 42% Republicans. So they're using registered voters, not likely voters. B, their sample size is too small, which increases the margin of error. And 3, they're oversampling Democrats relative to Republicans. It's all rigged, by the way, but I'm not making this up again. You can find all this information if you go to the pollster's website, and they issue these long press releases that no one reads, but it's all in there. So these polls are badly constructed, badly skewed. They're doing it again. They're doing the same thing they did in 2016. So the first thing I do is do the kind of reverse engineering I described. If you do that, you can infer a result that's probably a lot closer to the truth. And then the other thing is, there are a few pollsters in 2016 who got it right. Not many, but a couple. Trafalgar was one, and IBC. So I say, well, they got it right the last time. What are they saying today? And when you look at just those polls, not all of them, not the run of polls, not the big names, but just those, they're actually showing this race either too close to call or Trump slightly ahead. So the polls favor Biden. That's just the case, but you can't rely on that because the polls are badly constructed, and they have the flaws I described. There's another thing, which is you ask a voter, whom are you voting for? Trump or Biden? I'm voting for Trump or voting for Biden. But if you ask them another question, say, okay, you've told us who you're voting for, but who do you think is going to win? And they can often give you a different answer. They say, well, I'm voting for Biden, but I think Trump's going to win. Or you could say, I'm voting for Trump and I think Biden's going to win. It turns out the second question, who do you think is going to win, is more accurate than the first question, which is, who are you voting for? Whom are you voting for? So the first one is called the preference. What's your preference? The second one is called the expectation. What's your expectation? Well, you say, well, how could the expectation poll be more accurate than the preference poll? Because you're telling me who you're voting for. Well, the answer is, when you ask me the second question, who do I think is going to win? Now, what am I thinking? I'm thinking, well, all right, I know who I'm voting for, but what about my friends, my family members, my colleagues, my social network, my neighbors, all the people I talk to, people you run into walking their dogs? Well, I kind of mentally incorporate all that information to answer the expectation question. So each person is really answering on behalf of 100 people in their social network. So if you're asking 1,000 people in the poll, but you ask them what their expectation is, you're actually kind of scooping up data from 100,000 people, because that's how people think about it. They're incorporating all that other information. Well, of course, a poll with 100,000 people is going to be a lot more accurate than a poll of 1,000 people. And it turns out that if the expectation and the intention are the same, like I'm voting for Trump and I think Trump's going to win, or I'm voting for Ronald Reagan in 1984 and I think Reagan's going to win, they usually win. That's the case. Where it gets interesting is when the intention is different from the expectation has a predictive value of 78% correct versus 22% correct for the intention question. Well, the same polls I'm describing, they're flawed in other ways. They're showing on the expectation that people expect Trump to win, even if they're voting for Biden. And the expectation is more accurate. So again, not to be too geeky or scientific, but there's a lot you have to untangle to get this right. And then I use anecdotal evidence. We have social distancing in the United States. I know you have it in Victoria also. It's a lot, but one of the things that people are able to do without getting in trouble with the authorities is go out on their boats. Well, there are all these boat parades for Trump, and they deck out their boats with these big Trump flags and Trump banners, and they'll get 100 boats or more in a flotilla and march, or a motor or a sail up and down the harbors and all that. You see those all over the place. I've yet to see one Biden boat parade, not one. Now, you can say, well, Jim, that's not very scientific of you. Well, they're real people. Anecdotes are real people, and voting is about real people. So stuff like that. So between the skewed polls, the difference between intention and expectations, anecdotal evidence, and a lot else, my expectation is, my forecast is that Trump will win. But it's going to be close. We'll be up late on election night, but I could see that coming the last time. I can see it coming again. Having said that, we just, we saw the president get COVID, and fortunately seems to have recovered nicely. But who knows? We have 3 weeks to go, so surprises. I would say don't be surprised by surprises.
You just mentioned there that you'll be up late on election night. What are the chances, though, that the election's actually, the results are going to drag on for days and weeks, and we're looking at prolonged uncertainty here? And more to the point, what sort of impact will that have on the stock markets?
Right. Well, that's a very good question, Shae, and I think investors need to be prepared for that. And it's not getting much discussion, but independent of people, they like Trump or they like Biden or they have a view or whatever. Okay, that's fine. That's politics. But the one thing investors are not prepared for is that we're not going to know. The election day will come and go, and the next morning we won't know. And this could drag on for days or weeks. But let me explain why, because it's very important. A lot of state legislatures, by the way, people think we have national elections in the United States. Well, you're electing a president, you must have a national election. We really don't have national elections. We have 50 separate state elections, plus the District of Columbia. So we have 51 sort of mini elections. They each elect what are called electors, and then the electors pick the president. So without turning it into a civics class, the national polls actually don't mean anything. You have to go state by state. How's Trump doing in Pennsylvania? How's he doing in Michigan? How's he doing in Wisconsin? How's Biden doing in Florida? Those are the questions you have to answer in order to get this right. Well, 50 state elections means 50 different election laws. Some states use old-fashioned machines with a little lever. Some states you fill out a paper ballot. Well, the big thing this year are mail-in ballots, and it may be common in other parts of the world, but it's not that common in the United States. You've always been able to get an absentee ballot. Like, if you know you're going to be away, you go down to your town hall, you sign a thing, they give it to you, you fill it out and drop it off, and they count it later. But now, individual governors are mailing, unsolicited, uncalled for, they're mailing tens of millions of mail-in ballots, which then have to be filled out, sent back, and then counted. Well, when do you count them? Some states allow them to be counted as they come in, but other states, they're not allowed to open the envelopes until election day. Well, if you got 4 million mail-in ballots in a large state like Pennsylvania, how are you going to count 4 million ballots on election day? You're not. It's going to take, even with thousands, but even with hundreds of workers, and poll watchers and the rest, it will take days to count those ballots. That's just the beginning of the problem. I like to say Americans can't even, renew their driver's licenses without difficulty. How are they going to vote? I mean, some of these mail-in ballots, I've seen them, you check the box, okay, for your candidate, but then you have to sign it. Some states require some kind of certification. Then you have to put it in an inner envelope called a security envelope, and then you have to put that in an outer envelope, put a stamp on it, and get it to the mailbox on time. People mess that up. They don't get the verification. They forget to sign it. They leave off the stamp. They forget the security envelope. They send it in too late. Well, every one of those things I mentioned will be litigated. I'm not making fun of people who can't fill these things out. I'd probably screw it up myself. I'm going to go in person on election day. But the Democrats in particular, they've been scaring Americans because of COVID, saying, "Oh, if you go to vote, you're going to die of COVID." That's a little bit of an overstatement, but not much. So they've been scaring into these mail-in ballots. These are going out to dead people. Some people are getting 3. Sometimes they're leaving them in bins in the lobby of an apartment building, and the political operatives scoop up the whole bin and fill them all out and send them in. Did you have to get it in the postmark 3 days before the election, 2 days before the election? Can you send it in on election day? Can you send it in the day after if no one's looking? Well, guess what? Biden has over 600 lawyers. Donald Trump has over 600 lawyers. And these are all New York lawyers. These are not your locals, except in some cases. And or Washington lawyers. They're going to fan out all over the country. We're going to litigate everything I just mentioned. They're going to get judges to order, no, every vote counts. So even if they didn't sign it, count it anyway. Even if it came in late, count it anyway. The other side's going to argue that. If they lose a hearing, they're going to appeal. It's going to go to the U.S. Supreme Court. And guess what? We have a vacancy on the Supreme Court. we have sort of 4 conservatives and 4 liberals. There's another justice waiting to be confirmed, but she's not confirmed yet. What if we don't get that done by election day? And then you get a 4-4 tie. That we don't even know who the president is. I sound like I'm over dramatizing this, but I can assure you and the viewers, I'm not. This is the reality, partly fed by COVID, partly fed by the Democrats putting an emphasis on mail-in ballots, partly fed by the fact that we're a highly litigious society, and we have a vacancy on the Supreme Court. So could we be here in December, let's say, still fighting over this in court? The answer is that's entirely possible. And the one thing, markets can deal with good news, markets can deal with bad news. The one thing markets cannot deal with is uncertainty. And we could be looking at, as I said, a prolonged period of uncertainty. I don't think investors are ready for that.
Once again, Jim, you have given me a perfect lead into my next question. Let's talk about the uncertainty. Now, we were briefly off camera before having a chat about the changes, possible changes to capital gains tax if Biden was brought in. Now, this is something that's completely new to me here in Australia, and I'm sure for most Australians as well. So can you please explain what Biden's proposed changes are to capital gains tax, but also to how that could lead to dumping of US stocks in the lead up to Christmas?
Right, and it's nice to be actually talking about policy for a second, Shae, because so much is all about policy. You know, one person has this, the other person has the opposite view, and you go down all their policies and you debate them and you argue about them, and that's how the election goes. For some reason, I think this has a lot to do with Trump and Biden, for that matter. Trump is such a polarizing figure. There are a lot of people say, well, I like his policies. I like what he's done with, you know, confronting China on trade and lowering taxes and, you know, improving the border security, but I can't stand Trump. You know, he tweets too much. He's vulgar. He's name caller. You know, etc. And I always say he's easy to understand. He's from Queens. Queens is a borough of New York. It's a certain neighborhood, and people in Queens, they start fighting in the sandbox at 5 years old, and they never stop fighting. So if you're familiar with Queens in New York, it's easy to understand Trump, but most Americans have never been to Queens and they don't get it. But be that as it may, and Biden has his own issues. He appears to have dementia. He's in serious cognitive decline. He might not be president for more than a few months if he wins. Let's see if he wins. But if he wins, he might be removed from office as early as next spring under our 25th Amendment, in which case Kamala Harris would be acting president, believe it or not. So a vote for Biden is kind of a vote for Harris. She's unseasoned. No one really knows what she stands for. So put all that to one side. That's enough uncertainty for most investors. But there are policy differences. And just to give you a very simple example, the one most pertinent to stock investors or investors in gold stocks, certainly among others, the U.S. has a capital gains tax. So when you sell a share that you held for more than a year, if you buy it, you have to hold it for 1 year. But if you do, you qualify for a lower tax rate. Our highest individual tax rate right now is 37%, but the capital gains tax, if you've held a stock for a year or more, is 20%. So that's a big advantage. Trump would either keep it the same, possibly lower it, but let's just say he keeps it the same. So that's our baseline, 20%. Biden's platform, this is on his website. This is not, you know, a stretch or putting words in his mouth. He says he wants to raise the capital gains tax to 39.6%, which of course is almost double 20%. So you're talking about doubling the capital gains tax. Now, it couldn't be effective before January 1st. If Biden wins, he's not actually sworn in as president until late January. It takes months at best to pass a tax law like this. They can make it retroactive to January 1st, 2021. They probably will, but not before then. So if Biden wins, there's going to be this window between, you know, either November 3rd or if the result is disputed, maybe the end of November, who knows. Between learning that Biden is becoming the president and January 1st, there's going to be this window of 30, 40 days or so where investors are going to be saying, well, wait a second. Right now, if I sell my stock, I'm getting a 20% tax. But if I wait one more month, I'm going to pay almost 40%. So what are you going to do? You're going to dump your stocks. So there could be a massive wave of selling in late November, early December. And for that matter, if you believe the polls, you'd probably start selling your stocks today, because what are you waiting for? And this is, I have not seen this discussed very much. I do know that the numbers, the policies are straight from the candidate's website. So I do know that. And I was a tax lawyer for 10 years at the start of my career. So very familiar with how the legislative side works. And it's the case that there's going to be a window for about 6 weeks toward the end of the year. If Biden wins, you're going to be looking at doubling the capital gains tax. And that's going to be a huge incentive for selling. So we could have a massive sell-off independent of whether you like Biden or not, independent of what's going on with the economy, simply based on the tax advantages of selling early. And if that's true, and it is true, then the smarter people are going to jump the gun and do it as soon as possible. So this is a big weight on the stock market, again, independent of lots of other policy differences that we could talk about.
Look, I would love to dive into some of these policy differences. Unfortunately, we might run out of time today. But before we go, I do want to talk about what's happening in the gold market, because that's kind of what we do. But more importantly, when Trump was diagnosed with coronavirus, gold barely reacted. Now, I know there was a lot of talk about the US market sold off, but the first thing I did is, I checked the temperature of the market in gold, and gold just shrugged off Trump getting the coronavirus. So that suggests to me that it was the news wasn't as severe as the media made it out to be. But more importantly, what is the short-term impacts on the election on gold, and what are the long-term impacts on the gold price in general?
Well, I'm not completely surprised by the coronavirus reaction. Look, we all wish the president well. The truth is that even for someone his age, he's over 70, so that puts you a little more at risk. A little bit overweight, that puts you a little more at risk. But he has some things in his favor. He's not a smoker. He's not a drinker. He's not diabetic. Doesn't have asthma. So, his chances were good, kind of in the 98% range. Now, that's, no one likes to play Russian roulette, even with the 2% factor. But in all likelihood, he was going to recover, and he has. And, of course, he got the best treatment in the world in our Walter Reed Medical Center. So he's back on his feet. I'm sure there are some lingering after effects. That would be true for anyone, but he's back on his feet. He's back in the campaign. He's planning to do the debate. And I think that was the expectation. So even the announcement was a shock, but it came on a Friday night and the Saturday morning. The markets were closed and they had time to digest it. And given the likely outcome, he was better almost by Sunday or by Monday. So I'm not surprised there was a muted reaction there. The things that are driving gold are kind of things that have always driven gold. First are real interest rates, which are quite low, but they're going to get lower. So that's a positive for gold. People say rates are zero. How can they get lower? Well, the answer is they can go negative. I'm not even talking about a negative Fed funds target rate by the Fed. You could have negative interest rates in secondary market trading in the Treasury note market by people paying a premium greater than the present value of the coupons. That'll give you a negative yield to maturity. So there's room for rates to go negative. I expect they will. That's a plus for gold. Any kind of uncertainty, and we just described how there could be quite a bit of uncertainty, is favorable for gold. It's a traditional safe haven. And then even just on a fundamental basis, Australia's all about gold mining to a great extent, or a big part of its economy. And the U.S. and Australia among the top 5 gold producers in the world. But what I'm hearing from all over, including miners I talk to, is that the output is flat. It's not declining. I'm not talking about not being able to find 1 ounce of gold, but the gold discoveries are fewer and further between. The quality of the ore is lower, meaning less gold per ton of ore. And gold output has been flat around 3,300 tons per year for the last 5 years. It wiggles a little bit. It's going to go down in 2020. I've already heard this from miners because of COVID. It's an industry, but gold's something we're both interested in, but it's no different than, shipping or manufacturing or assembly line or restaurants or anything else. They had to cut back production and operations because of the COVID virus. So output's going to go down, but demand is up, particularly from central banks. And, the Russia-China story has been out there, but Turkey's buying more, Mexico, Philippines, Vietnam, Kyrgyzstan, a lot of other countries are buying more, and individuals are buying more, and institutions are starting to, dip their toe in the water. So it's like any commodity. If supply is flat and demand is up, it's going to drive the price up. And then there's just geopolitical tension. So whichever one of those factors you take, real rates, fundamental supply and demand, monetary comparison, geopolitical stress, they're all pointing to higher gold prices, which is exactly what I expect.
All right, Jim, we're going to have to leave it there because we're going to run out of time. But as you know, I could ask you questions all day if given the opportunity. I want to thank you very much for joining us today, and I hope Australians have learned something from your insights.
Thanks a lot, Shae.